Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified, episode 58. So what are we talking about? Well, I want to continue talking about IPOs and how to find them and a few tips and tricks on trading them using StockCharts.com and the ACP. And this is something that I've been doing quite a bit lately. What I would encourage you to do is go in and watch last week's presentation to get up to speed. And also you want to go in and look at some of my weekend charts presentations where I do a lot of walkthroughs on IPOs. We have a new mystery chart this week. We also have a reveal. And then housekeeping, I do take requests. What I've been doing since we're no longer live with these shows is taking the request and then covering them on Thursday nights in my weekend charts presentation, which is a lot more free-flowing, and I can take time to answer a lot of questions. And if you contact me through davelandry.com/contact, give me the question, and that'll give me a day or so to prepare for the presentation. If you're interested in the slides from this presentation and all the other presentations, which include the setups and the money management and other stuff, go to davelandry.com/StockCharts, and I'll give you enough information to keep you busy for a long time. So let's take a look at these mystery charts real quick, and then I want to talk a little bit about IPOs and go IPO treasure hunting. So here's the mystery chart reveal. This is YQ. This was mentioned a few weeks back, and you can see that it took off. This is an IPO, by the way, and then it had a first deep retracement, which is a pattern that I like quite a bit in IPOs. And this is kind of what a first deep retracement looks like. It just has a big thrust higher, followed by a fairly deep retracement back down. So the entry was here, way up here. Liberal entry to avoid being entered on noise alone or triggered on noise alone. Stop down here and initial profit target up here. So let's take a look at what happened. You can see it did rally a little bit, but did not trigger an entry. I did have some clients that took this trade on that rally, and unfortunately for them, it did not work out. And that's one reason why I preach waiting for entries. Sometimes you can get front run the setup, so to speak. I don't do it personally on anything I recommend, but sometimes I'll look at a setup and maybe get in a little bit early. But in a case like this, as you can see, you were better off just waiting for the entry. If we get into a market where everything's just going crazy, then you can front run a little bit. And we have been in that kind of market as of late. But as a general statement, it's better from a discipline standpoint to wait for that entry. Now, here's another new mystery chart, and this stock has bottomed out very nicely over a long period of time. To those who are into classical technical analysis will notice a cup or a cup and a handle in this particular case, and you can see that it's pulled back. I've got an entry up here, I've got a stop down here, and initial profit target up here. My goal with this setup, well, with any setup for that matter, my goal for this setup, especially at the big picture bottom like this, would be for the stock to double or triple in value. Maybe go back to the old highs way back in 2019. So we'll take a look at that one in upcoming shows. Now, I have been talking about IPOs, and as I said a minute ago, go in and watch last week's presentation to get up to speed on that. Also, prior presentations, and if you go to that link, davelandry.com/StockCharts, I'll give you a link that has all my Trading Simplified shows on it, so that'll get you up to speed too. Just a couple things I want to cover real quickly. And the reason that I call them a technician's dream is a lot of times they just go up. And if they go up, you buy them. And if they go down, you just don't buy them. So sometimes they come public and go down. Sometimes they come public and go up. And it's almost, and I use the word almost, and make a little air quotes here, but it's almost as easy as doing just that. Now, as you're going to see when we get to the live charts here in just 1 second, there's the Pioneer setups, and that could be something like a buy at B, where we're looking to buy the first closing high. Again, not to beat the dead horse, but go and watch last week's presentation and other presentations. Now, a secondary setup could occur after the first few weeks of trading, and that's something like a deep retracement, like we just talked about, first deep retracement, or just a generic pullback would be two good examples of that. Now, keep in mind, a buy at B could happen weeks or months down the road, but the buy at B is actually a setup that could trigger the earliest. And sometimes a secondary setup may trigger before something like a buy at B. But as a general statement, buy at Bs tend to trigger a lot earlier than something that's a secondary pattern. This will make a little bit more sense when we get to the charts. So My goal with this presentation and the presentations that I do here is not to teach you how to use stock charts. There are those out there who are a lot better at doing it than I am, but rather to show you how I use it to benefit me in things such as my IPO analysis. And as I said last week, or whenever we did the last show, that was a few weeks ago, but the people at StockCharts have been really accommodating and providing me with the tools that I need. As I've said quite a bit, I use a lot of tools in my business. And the great thing about StockCharts.com is that they're giving me more and more of the tools that I need. One of them is how to find IPOs, and you can go to this link here. And again, if you download the slides, you'll get this link. So let's hop out to that link and let's start treasure hunting. Now, so if we take a look at this list here, I use that link and then I saved the watch list and imported it into ACP. I generally don't use volume in my analysis except for the fact that I want to make sure the stock is liquid enough to trade. Now in IPOs, I spend a lot of time talking about volume. In a nutshell, you sort of have to eyeball it. In a case like this, okay, we got 1.3 million shares being traded on a 5-day moving average, so that should be plenty enough shares to get off a decent trade as a private trader. In other cases, though, you may have to go in and look at individual volume days just to see if it has enough volume. As one of my clients, John R., said in my Facebook group, sometimes you got to be careful with these because he calls them, you end up in Hotel California, and meaning that it's hard to get out. You can check in, but you can't get out. So let's start going through these, and I want to just go through as many as possible and show you some of the things I look for and show you some of the nuances and characteristics of IPOs. Okay, first one up, ABCL. You can see this thing came public and just died out, so there's nothing to do. So what did I say earlier? It's kind of like the old Will Rogers saying, buy stocks that go up. They don't go up, don't buy them. Now this one looks pretty good. It's a little bit thin on the volume. You can see this a few days in here was not a whole lot of volume, so I'd be extremely careful, but it has ran up nicely and pulled back. So this would be a secondary setup, obviously, but that's a pretty good looking stock. So write that one down, ABC. Airbnb, now the buy at B pattern, remember, we don't buy stocks if the old rule was more than $20 a share. And based on the action over the last year or so, everything's been so crazy. I've kind of upped that rule a little bit. I'll occasionally buy stocks maybe at $25 a share or a little bit higher, but above $30 a share or more, I won't buy a buy at B. I'll wait for some sort of secondary setup. Now, one thing that kind of messes the charts up a little bit is StockCharts.com puts in the opening tick, or the day before the open tick, I should say. This is where it was set to come public. And one thing of use with this is if they come public, if they are set to come public here and then they open up way up here, my feeling is that they're priced too high, they're going to die. There's no meat left on the bone for anybody to trade once it gaps up so much higher. So that's one use of that. But otherwise, I wish I could just turn it off so I could see the chart and not have to adjust things. But as you can see, came public, kind of died out, tried to rally, and it's kind of died out again. So for me, there's nothing to do there. Maybe wait for a secondary type of setup. Now, volume is super thin on this one. This is one of those acquisition companies. You're going to see a lot of these in today's presentation. Here's another acquisition company. Volume pretty light on this. Range is also fairly narrow, only about a 1-point range, if that much. So nothing to get too excited about there. I do have one client that likes those, or is okay, I should say, with those narrow range SPOC type companies, provided that they have a plethora of volume. Let's say volume in the millions of shares. Now this one looks pretty good. It's got a nice thrust higher followed by a pullback, so that would be a secondary setup. So write that one down. It's pretty thin on the volume though, so I would be super careful and a little leery about actually trading it. So here's one that came public at much higher levels. It shot up and so forth. It's come back in. So there's nothing to really do here on this one. Now it is a first deep retracement though. If we can get the charts to look correct here. Let's see if we can make it happen. So it might be worth a shot. And I have this one in my Landry list, which is a list I publish daily of stocks to watch. So based on, once we adjust the chart a little bit, it does look a little bit better in here. And again, yeah, this would be a first deep retracement. So that one looks okay. ALGM, this is one I actually played earlier in the process. And let's see if we can get the chart to go back in time a little bit. Let's go back 3 months and see. Yeah, so you can see early in the process, I played this one, and we played it twice, and I'm actually still long it now. Initially, I played it as a buy B, 1, 2, 3, 4, 1, 2, 3, 4, 5, and as I said in prior presentations, I actually got long on this day here. Technically, I should have gotten long on this day. So by chance, my accidentally getting long a little bit early actually worked out. I got a small profit, stopped out, and then notice that it made a nice little first deep retracement. And let me just draw that in for you really quick to show you what's happening here. So it made a nice rally up, okay, and then it made a nice deep retracement. Now, without this bar in here, it would be a little bit more obvious. So we did get long somewhere in here. We took profits somewhere up here, and our stop is actually now trailed up to about right here on this one. So far, so good on that one. Now, let's take a look at some more of these in here. Continue to go through them. Now, this is set up as a pullback. Here's another one that I did play early in the process. I got long on this day here. That was a buy at B pattern. I did flip out some shares somewhere around here. And if you go in and watch the prior presentations, a lot of these, I covered them. And also, any of these that are in my trading service, such as the ALGM and the YQ, even though the YQ didn't trigger, you can go in and look at the archives of my service to get these setups. But this one took off, came back in, was a nice deep retracement, and then I got long again on this one as it rallied out of the retracement. This one's kind of wide and loose and sideways. Volume is super light, so let's pass on that. Here's another one of those acquisition companies. Now, when I did an IPO course back in, and we have no chart for that one, when I did an IPO course way back in 2014, I said, just ignore these acquisition companies because most of them will come public, chop around, and die out. But right now, they're the hottest thing in Hot Town. So here's one that came public at higher levels. So I would ignore this buy at B back here, even though it looks like if you could have held on, it would have worked out. But it's been kind of wide and loose and sideways, so nothing to do there. This one had a nice little buy at B back here. Again, more than $20 a share on the trigger, if memory serves. Yeah, but again, in more recent years, I've been a little bit more lenient, so the buy would have been here. Now, in some of these, you're probably like, well, Dave, why didn't you buy it? Well, lately, there's been so many setups, it's like you can't kiss all the women. Now, ASO is what I used earlier as an example of a pioneer versus a secondary setup. So your pioneer setup would have gotten you long back here. And I wasn't super excited about the range on the stock back here. Also, it's Academy Sports. It's a retail, brick and mortar retailer. So kind of hard for me to get excited about that. But the technician in me says, okay, well, if this thing makes a secondary setup, then I should take it. So just to rewind that a bit, on a pioneer setup, I'm looking for a little bit more excitement in the company itself. Maybe a biotech or one of these stupid SPOCs or something like that to go after. But we did get long this one. We did take partial profits already. And as time allows in upcoming shows, I'll do some walkthroughs on this and other recent fantastic trend trades. Now this one's kind of all over the place in here, so I would leave it alone. But if it pulls back, it could set up again. This one has begun to take off a little bit. The range is a little bit small on it, not a huge range, only about 2 points. So maybe on a secondary setup, volume is a little bit on the thin side. So we might just have to wait and see on that one. Volume is super thin on this one. So for now, we'll have to pass on that one. Now, this looks a little interesting. Volume's a little thin. It's going mostly sideways. A little hard to tell, again, with that first tick in there. So the range is fairly small based on at least a recent range. Longer term, looks like it's okay. So let's take a look at this one. Volume's a little light on this one, a little bit higher priced. And we'll just have to see how it retraces and see if it's worthwhile. But volume, again, a little light on that one, so you might want to pass. Let's take a look at the next one in here. BDSX is interesting, and I am long this particular stock. Now, this is a case where we had plenty of volume or decent volume back here, as you could see, but then the volume kind of dried up, and it did become a bit of a Hotel California situation. Now, when that happens, what I do is I put limit orders in to try to get that initial profit target out. And I don't split hairs, and I don't try to trail a stop intraday and use some of those other tricks that I might use to squeeze a little bit more profits out. But I got long on this one on this day here, if memory serves. And I recently took partial profits out of it. It might have been yesterday or day before. And then it's pulling back a little bit. And if it gets stopped out, so be it. So let's take a look. Let's keep going down the list. Now this one is, it has volume, but it's this big old gap in here. I probably would ignore that one, but it is one of those stupid SPOC companies. I guess I should call them stupid as long as I'm making money in them. This one's kind of wide and loose and sideways, or just sideways, I should say. Volume is a little bit on the thin side, and is only about 1 point range, so I would pass on that one. Here's one with a narrow range. Let's pick up the pace a little bit, see if we can get through these. This one's kind of wide and loose and all over the place. I guess technically buy at B would have been back here. One issue that I consider with IPOs is I'm really not too excited to go after them if they're around $4 or $5 a share, very low price, because they tend to not perform very well. Seems like around, let's say, $8 to $10 at least, and then for the Pioneer setups, again, maybe $25 or less. So this is a case where this would have been a buy at B back here, but the range was fairly small. The price was a little too high for a buy at B, and you can see it actually imploded. Never really got that much higher than it did over the first few days of trading. But now it's beginning to trend, maybe on a pullback. Volume a little bit on the thin side, though. We'll have to check the spread on that one when it does pull back, maybe like a TKO or something. Now this one's actually in my watch list for today. You have to keep an eye on the volume because the volume has dried up a little bit here, but you can see it's got a nice little gap higher, another gap higher. The gap is not too extreme in this particular case. Nice pullback, so that's a good looking setup right there. Write that one down. This one you can see another one of those SPOCs, a little bit on the thin side, super wide range bar here, kind of all over the place. So I would leave it alone for now and see if it takes off and begins to run. Now this is one we talked about before. This is one that I did get long, a little bit higher price as a buy at B. I got long this one, and truth be told, I was probably chasing rabbits or whatever the case may be, and I forgot to take partial profits on that one. I actually got stopped out at a loss. So yeah, I do occasionally make mistakes. More than I care to admit, but I did talk about my mistakes last year in the Reflections 2020, so make sure you watch that video. This is one that I did play back when it made its little buy at B. I was able to cash out of it, and I recently got stopped out of this one just yesterday, in fact. And now that it's pulled back below this base, I would leave it alone for now. CDAC, I missed this one and then kicked myself in the butt for missing it. I found that I didn't have enough range back here, but it did begin to get a little bit of range on this day here. Technically, your buy at B would have been 1, 2, 3, 4, 5, but it just didn't have quite the range that I would have preferred on that. I suppose you could have taken a secondary signal here, and in hindsight, I wish I would have. It's a little bit on the thin side, but not too bad now. But you can see this would have been your secondary setup coming out of this pullback. And that's one, whenever I see it, I actually have to go in and check my portfolio to see why I didn't take that one. And by the way, that's a great exercise. Go in and see if you actually took these trades when you see them in hindsight on the chart. And by the way, they should be obvious when you're looking through your charts. And this happens to me, not as often as I want, but quite often. I'll see a chart, had a beautiful setup, beautiful run up, and think, boy, I should have traded that. And I'll go and look at my records. It's like, and I actually did, which makes me feel pretty good. Not all the time, though. Okay, here's another one coming public at a little bit higher level. The range is kind of small on this, so I would wait for a secondary setup. And you can see it's almost retraced 100% of everything that's done so far. So leave that one alone unless we see some serious rally. This one is super thin. It's another one of those SPOC companies. This one, the range, another SPOC, by the way, about a 1 point range, fairly thin. Leave that alone, sideways so far. Maybe on a secondary setup if the volume increases. Here's another one, hardly any range, okay? You look at the chart like, wow, look at that trend. It's kind of like Tiny Elvis, look at that trend, it's huge. And the reality is it's only not even 1 point. That's a half a point run. So not enough to get excited about on that one. So let's continue down the list. And this one just kind of going, this one is just going sideways. volume is thin, range is small. So you see a pattern beginning to develop here. Now here's one that I did play, and I think I played it twice if memory serves. I did flip out of it and stopped out a remainder of my shares. And again, a lot of these, I did cover them in prior shows. This one's kind of sideways, narrow range, light volume. Okay, you get the idea. Now, this is a great example of why we don't buy IPOs out of the gate. This is DoorDash. A lot of excitement about this IPO. But look, it came public, and then it just died out. And that's one of the most common patterns in IPOs, that and the fly and the die. Fly and the die means they run up, and then they come all the way back in. The fly and the die is a little bit more common than the die and the die like you have here. So that's the good news, is you can make a lot of money on those fly and die patterns, provided, of course, you're using proper money management. And on these die and die patterns, you just simply avoid the stock. This one, super thin, so let's avoid it for now. This is on my radar, though, except for a couple of the wide range bars in here make it look kind of funky. It has a nice thrust higher, a nice persistent trend higher, and beginning to pull back. It might be worth a shot, but we're going to have to pay attention to volume. This one's just kind of sideways, fairly narrow range. You guessed it, another acquisition company. I know the fat lady's probably getting ready to sing on all these things. This looks like some sort of ETF or something. And let's see, it's rallied up a little bit in here, come back in, but it's only about a 2-point range. So I would pass on that one for now, at least. This was just way too thin. This one, sort of sideways. You guessed it, another SPOC. Volume's a little thin, narrow range. So let's pass on that, at least for now. This one was kind of interesting. Now, this is a case where a buy it be at high levels would have worked out nicely. I did not trade this one because it was a little bit too high for me to trade. Remember the rule, it has to close above the day one high if the day one high sets the high for the week. And in this particular case, it's pulled back in here, but I don't like the sideways action. The fact that it made this base and pulled back below. So I would pass on that one for now. Keep it on a momentum list, possibly for future reference. Another one of these stupid SPOCs. I guess I need to stop calling them stupid, right? As I think I said a minute ago. Narrow range, low volume, nothing to do there. Narrow range, low volume, nothing to do there. It's a biomedical acquisition company. This is another acquisition company. As you can see, narrow range, light volume, nothing to do there, even though it does look somewhat like a pullback. Now, again, a buy at B would have triggered on this day here, but notice that it was $50 a share on that day. So I don't take the higher price buy at Bs, not to beat the dead horse, because a lot of times they just come right back in and die. There's no meat left on the bone, so to speak. And you can see this is trading at brand new lows, so I would leave that one alone. FHTX, I was long. This one, the volume has really dried up. And I don't remember exactly where I got long. Maybe on, it was the range was kind of small in here, but it did begin to expand. So maybe on this day here, I could check the records, my records for next show. And you can see it's made a pretty good run higher. It's been kind of a choppy ride. But I was able to take partial profits, and I did get stopped out of that one very recently. As we continue on, narrow range, thin SPOC. Nothing wrong with SPOCs, but they have to have a tradable pattern. Again, narrow range, SPOC, and sideways. Now this one I'm kicking myself in the butt on. The range wasn't huge back here. It was a little bit lower price. I couldn't get excited about silver back in December, and I passed on this. And some of my peeps got it, and congratulations to them for catching a double on that. I did not take it. Now, a TKO or some kind of pullback, absolutely, I'll be all over that one for a secondary setup. Remember, if you pass on a Pioneer setup, then there might be a chance, like in the ASO and ALGM and quite a few other ones mentioned earlier, there might be a chance that you can get in on a secondary setup. So this one might work out eventually as a buy at B. Volume is okay, but you can see so far it's just kind of died out. So believe it or not, this would actually have to close above 14 and change to be a buy. So for now, we're going to pass. GDRX is kind of all over the place. It came public at higher levels. If the price too high, they're going to die. And I wouldn't play the buy B back here just because it was $50-something a share. and it imploded. Not that they'll always implode like this in such a spectacular way. And so far, it's kind of wide and loose. Now, this would be something that maybe down the road I would trade. Maybe if it comes down to brand new lows and bottoms out for a while, kind of looks like that mystery chart. HLD, what is that? Probably a SPOC. The volume is a little light. You've got decent trend. You've got a decent trend here. The volume is just a little too light, or a lot too light, I should say, to go after. So what do we have here? It comes public, and this dies out. This one, kind of funky looking sideways, and the volume is just way too light to trade. This one's kind of all over the place. Again, with a higher price stock like this, you would not take the first buy B, although you'll notice a lot of times that would have worked, but it doesn't fit the methodology, at least the way I like to trade it. So I would have passed on that one. I did pass on that one. Here's one of those holding companies. The volume looks pretty light on this, so I'd be careful on that one. Now, here's a good example of the first signal versus a secondary signal. This is a pool company. I couldn't get too excited about it. It was also above $25 or above $20 and have a $20 rule, but I got to thinking, maybe I could bend that a little bit, as I've been saying. But in a case like this, it was really hard for me to get excited about pool supplies. So I passed on the buy at B setup, which would have triggered on this day here. And so far, that really hasn't worked out too well. Now, this thing could pull back. Did I just say pull back? It could pull back and be worth a shot. Just be careful you don't get soaked on that one. As you can see, narrow range on this one, acquisition company, thin volume. This one is kind of all over the place, higher priced. So I would treat this one now as a core setup, plus it's too thin. It would have to rally up considerably. Now, here's a stock that came public at high levels, and this is a case where a buy at B may have worked nicely, because look, your buy at B would have been, let's see, 1, 2, 3, oh, there's more to it. But wait, there's more. Let's see, buy at B would have been 1, 2, 3, 4. Would have been on this day here, and yeah, it kind of died out for a while, but eventually did take off. And now that I would treat this as just a normal setup similar to the core methodology. Pullbacks, TKOs. You had a bit of a TKO move yesterday, not quite big enough for my taste, and then a little bit more pullback today. So this is set up as a pullback, and I'd call that a toddler. A toddler is a fairly new IPO, but not brand new. So here's another one of these SPOCs, not much range so far and no volume. So let's just get through a few more of these, and you kind of get the idea. No volume there. Let's skip that. No volume. Now, this one has plenty of volume, and this is actually, I have this one listed today in my trading service. It does have a bit of this is my Landry list, my momentum list that I watch every day, or my setup list, I should say. It does have a bit of a spread to it, but it's not horrible, and it's hard to see on this chart, but it is a nice first deep retracement, so that would be another setup that you might want to keep an eye on. So you kind of get an idea of what I'm looking for in these charts, pioneer type of setups, and then after the pioneer setups, I look for secondary type of setups. So I'm getting questions about my Facebook group. You do have to be a gold member of DaveLandry.com, and that keeps the riffraff out. I'm half kidding. Now, I've been involved in forums on and off throughout my career, and usually they fail miserably. But this one has been phenomenal, and I think it's because everybody has been vetted that's there. If you need to reach me, DaveLandry.com/contact. If you want the slides from this presentation, and this one's not too exciting, I know, but as far as the slides are concerned. But there are setups and money management in the other presentations. So go to this link here. I'll also give you limited access to my members area, all 3 of my books in PDF format. Get to know me first and see if the methodology clicks with you. And again, contact information right there. I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.